The Peter Schiff Show.
Today's podcast is sponsored by Mint Mobile. Get your new customer offer and your new 3-month unlimited wireless plan for just $15 a month at mintmobile.com/gold. Additional taxes, fees, and restrictions apply. See Mint Mobile for details. Good evening, everybody. Hopefully everybody is enjoying their Labor Day weekend, the unofficial end of summer. A lot of you have kids going back to school on, I guess, Tuesday. My kids here in Puerto Rico, they already resumed school a couple of weeks ago. This is probably the last, or it is the last Sunday night podcast that I'm going to do for a while because NFL season kicks off this week. And so I'm not going to go head-to-head with the NFL on Sunday nights to do these podcasts. In fact, I like to watch the football games myself. So that means I really can't do the podcasts on Sunday night. So this is going to be the last time I do that. Actually, I was at a party just 15 minutes ago. I actually left the party early to come back and do this podcast. That shows you the type of dedication I have to making sure I have at least one podcast per week. In fact, I'm probably going to go back to the party when I'm done with the podcast. I know a lot of you think that I do the podcasts, I read the comments of people think, hey, what is he, drunk or something? I'm never drunk when I do the podcast, including right now. I did have some drinks, but I made sure to have no more than 2 because I knew that I was going to do this podcast. And so I had to, restrain, my partying in order to be able to, do this podcast. Anyway, what I really want to focus on for today is the economic data that came out during the week and the way the markets have completely misinterpreted the data. Because if you look at the reaction and the media spin on this data, you would think that we got good news, but we actually got nothing but bad news. And because of the misperception, we did have a pullback in the price of gold, although minimal. In fact, gold closed over 2,500. So the pullback was about maybe 1/3 from where we were a week ago. But despite that very minor decline in the price of gold stocks got hit pretty hard. The GDX was almost down 2%, and the GDXJ was almost down 4% on a nothing move down. That's how nervous these gold stock traders are. I mean, there's no optimism. I mean, not even close to euphoria. They are very skeptical. And the minute they see the price of gold go down, even slightly, they're like dumping their gold stocks. And the reason that the GDX wasn't down more was because Newmont kept hitting new 52-week highs because somebody finally upgraded Newmont to a buy. I forget the firm that upgraded it, but I talked earlier this year when Newmont got downgraded to a sell, and I was buying more Newmont, even though I have a huge position in Newmont. I had to buy that downgrade because I thought it was so ridiculous. So finally, it got upgraded to a buy. But I thought the interesting part about the upgrade was the price target was only about 10% above the current price, which is ridiculous. I mean, why even bother to buy it if you think you only got 10% upside? I mean, they waited for the stock to move up dramatically. I don't know what is 60, 80% from the lows to say buy it for the next 10%. I mean, the price target is ridiculously low compared to where I think it's going to go. But I think Newmont getting that upgrade and it kept hitting new 52-week highs, that's what propped up the GDX. Newmont's not in the GDXJ, which is why it was down closer to 4%. But neither of these indexes should have been down. They should have been up. It doesn't matter that gold prices are down. They're still above 2,500. These gold stocks are priced for gold to be much lower than 2,500 because none of the gold stock investors even believe that gold could get to 2,500. And that's why they think it's not going to stay at 2,500. They're right about that because it's going much higher than 2,500. Also, the dollar index bounced back a little bit on the week, again, based on the misinterpretation of the data that came out during the week. I think the traders looked at this data as meaning, well, maybe the Fed is not going to cut rates as much as we thought. I mean, it's pretty much baked in the cake. They're going to cut in September, which, this is the last day, I think, of August. But so the September meeting is coming up. And I think there's no way the Fed's not going to cut. But I think what the markets were looking at is the cuts that come later. And I think the misinterpretation of the economic data that came out this week was that, oh, the economy is stronger, and so maybe we won't get as many rate cuts. And I think that's what boosted the dollar. That's what, weighed on gold. But if you actually understand the economic data, it was all bad. It's all a weak economy with higher inflation. It's stagflation. It's bad economic news. But so many traders just have no understanding of basic economics. And so that's why in the short run, the markets do the opposite maybe of what they should be doing. But in the long run, the economic fundamentals are going to be borne out. And the markets are going to do what they should do. And that's going to confound the people who don't understand the economics, the people who don't listen to this podcast. The people who do listen have a much better understanding of what's actually going on. And so that, we can position our investments to profit from the inevitable realignment where the markets move to reflect the underlying economic fundamentals. So one of the data points that came out this week that didn't really get any media attention, but to the extent that it did, it was positive, was the trade deficit, the merchandise trade deficit. Now, the expectation was for the July deficit to be $98 billion, which is a high number, right, in and of itself. But we actually got a much higher number. $102.7 billion was the deficit for July. That was bigger than the highest end of the range of expectations. The high number was 101 billion. And so we came out at 102.7 billion. That's a big number. That gets subtracted from GDP. But here's what's more significant about that number. It is the worst number, the biggest, right, being the worst because it's a deficit. So it's the worst number since April of 2022. But there was something unique about April of 2022. In fact, the first 4 months of 2022 had the biggest monthly merchandise trade deficits in history. And the reason for that was because in January of 2022, we reopened the economy from the COVID lockdowns. And so there was all this kind of bottled up demand or exports of goods. All this stuff wasn't coming in because of COVID. Everything was shut down. People weren't working. And so we had all this pent up imports that were just kind of waiting to be shipped. And then we reopened the economy and we got this surge. And so we had these huge trade deficits, record high trade deficits for 4 months in a row. And then the numbers, came back down to the normal high deficits that we have every month. Well, the deficit that we just had is the biggest trade deficit we've ever had outside of those 4 months where we reopened the economy from the COVID lockdowns. This is really bad news because this shows you how dysfunctional the U.S. economy is, that during normal times, right, we're not coming out of a pandemic, we're running a merchandise trade deficit of this magnitude, and it's going to go higher from here. And this also reflects the manufacturing recession that we have been in for pretty much the entirety of the Biden presidency, or maybe I should call it the Harris presidency. Who knows who's actually the president, although it's probably not Harris either, because I don't think she's competent enough to run the economy even into the ground. But whoever's been, pulling the strings, for this puppet administration, we've had a manufacturing recession the entire time. And that's why the trade deficit is so big, because we can't manufacture the stuff that we need. We can't manufacture the stuff that anybody needs. And so we end up relying more heavily on importing the stuff that other countries make that we don't. But, the amazing part about the number is nobody cares. The US dollar was up on the day that this horrific trade deficit was released. Now, I remember in the 1980s, some of you that listen to the podcast may not remember the 1980s. Maybe you were in school. But I was, in the industry, and I was trading in the 80s. And I remember that the trade deficit was a big number. It was probably the biggest number, bigger than the employment numbers. It was the number everybody waited for. And one of the reasons we got the 1987 stock market crash was because we had a $17 billion merchandise trade deficit. $17 billion. We just got almost $103 billion, and it was a yawn. But $17 billion, sparked the stock market crash in 1987. But everybody was worried about these big trade deficits. People understood the problem that these big trade deficits posed. But now we've had them for so long, no one cares anymore, right? It's like a false sense of complacency that the trade deficit has been so bad for so long that all the fears that we had about these big trade deficits in the 80s have disappeared, even though the trade deficits themselves are much larger. Now, it's not that they don't pose a threat anymore. They do. It's just that it hasn't resulted in a crisis, and so nobody cares. Well, they don't care until they do, because we're going to have a major dollar collapse as a result of these massive trade deficits. It just hasn't happened yet, but it is going to happen. But what's even worse about the lack of understanding of how bad this trade deficit is, remember, even Donald Trump, when he ran for president the first time, one of his big campaign issues was the trade deficit and how big it was. And part of making America great again was reversing this trade deficit, which never happened. The trade deficits hit record highs under Trump, and then they hit even new record highs under Biden. So Trump didn't make any headway, despite all the tariffs, right? But if you look at the way the media reported, to the extent that they even did report on the trade deficit, it was good news. It was that this shows that we have a strong economy because we're sucking in all these imports, right? Americans, the U.S. economy is so strong that we're buying all this stuff that we didn't make. And the problem is overseas. It's those weak foreign economies that can't afford to buy our stuff, right? So this trade deficit is being spun by the media as good news when it's bad news. A strong economy does not generate a larger trade deficit. A strong economy produces more stuff. You produce more stuff than you need. That's strength. You have a surplus of stuff, and you can export what you produce to other countries who didn't produce as much as you did. To say that a low or big trade deficit, which is weakness in manufacturing and trade, evidences a strong economy, is Orwellian. It's complete doublespeak nonsense. The idea that, well, we're not exporting because the rest of the world isn't strong enough to afford our stuff. What stuff? We're not making this stuff. They're making this stuff outside the United States. The reason we're buying so many imports is because we don't have the factories to produce the stuff. I mean, think about it. If we had the factories, why buy imports? Because you have to ship the imports in across the Atlantic or across the Pacific. So if we could make the stuff ourselves, we wouldn't have to import it. But we can't make the stuff ourselves because we don't have the capability. We don't have the industrial base anymore. We have a weak manufacturing economy. We have a recession in manufacturing. And so we rely on the stronger economies abroad to make the stuff that we can't. And that's why when you hear Biden or anybody or in the Harris campaign, they want to talk about how our economy is the envy of the world. We've got the strongest economy in the world. No, we don't. If we had the strongest economy in the world, we wouldn't have record trade deficits, which is exactly what we have. Because if you throw out the COVID reopening, which is an aberration, the U.S. economy has never produced merchandise trade deficits as large as the trade deficit that we just produced in the month of July. So that's bad economic news being spun by the mainstream media, including the financial media, as good news. I mean, that's taking economic lemons and making lemonade. Anyway, we got a quick commercial break, so stick around. We'll be right back.
I love a great deal as much as the next guy, but it has to be easy. No hoops, no BS. So when Mint Mobile said it was easy to get wireless for $15 a month with the purchase of a 3-month plan, I called them on it. Turns out it really is that easy to get wireless for $15 a month. It's time to switch to Mint Mobile today and enjoy unlimited talk, text, and data for just $15 a month. In fact, when it was time to get my son Preston his own phone, Mint Mobile was the perfect choice. Forget about the steep monthly fees and overages that you get with your current wireless plan and make the switch to Mint Mobile's premium wireless plans, starting at just $15 a month. Choose any Mint Mobile plan, which includes high-speed data with unlimited talk and text on the nation's largest 5G network. You can even keep your current phone and number when you switch and bring over all your existing contracts. Ditch overpriced wireless with Mint Mobile's limited time deal and get 3 months of premium wireless service for $15 a month. To get this new customer offer and your new 3-month unlimited wireless plan for just $15 a month, go to mintmobile.com/gold. That's mintmobile.com/gold. Cut your wireless bill to $15 a month at mintmobile.com/gold. $45 upfront payment required, equivalent to $15 a month. New customers on the first 3-month plan only. Speed slower above 40 gigabytes on unlimited plans. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
We're talking about the economic data that came out during the week. Another key data point that came out on Friday was the personal income and spending numbers. And again, these numbers were misinterpreted by the markets as evidencing a stronger economy and also evidencing higher inflation, right? Which, is taken as news that, oh, well, the Fed, maybe they won't cut as much as we thought. And so that was supportive of the US dollar and a headwind for gold. But it actually should have been a suppressant on the dollar and a tailwind from gold, because the people who are reporting on this information, the majority of the people who are trading on this information, are clueless about what the information actually reveals about the U.S. economy. So first of all, the personal income numbers, they came out above expectations. They were looking for a gain of 0.2, and there was a gain of 0.3. I mean, it wasn't that big a beat, but it was still somewhat higher than what the market expected. But the key is that personal spending rose by 0.5, and that was in line with expectations. But if spending is going up by 0.5 and incomes are going up by 0.2, how does that work? Well, you have to dig into your savings, because you're increasing your spending more than you're increasing your income. That is not a good thing. That is a bad thing. And the savings rate dropped to 2.9%. This is one of the lowest. It could even be the lowest number ever for the savings rate. Now, I know years and years ago, the government changed the way they calculate savings to make the number look bigger. They do that all the time. And so they started counting stuff in savings that aren't really savings. But even with that, we're at 2.9%. This is low as we've been, certainly going back to before COVID. And credit card debt is at an all-time record high. So you got record high credit card debt and record low savings. And they're telling us that we have a good economy. And what's even more frustrating is that they claim you look at the media reports about the rising credit card debt and the rising spending and the falling savings, and the media repackages that as good economic news. They say, well, the economy is so strong that people are taking on more debt to buy stuff. Like they have confidence because the economy is so great, people will go out and use their credit cards. The economy is so good that people will deplete their savings to spend because they're not concerned, right? They're so confident in the future that they don't even feel like they have to save for a rainy day. So they're eating into their savings because everything is so great. These are the lies that the media, the financial media, wants you to swallow. But it's all BS. This is not how it works in a strong economy. In a strong economy, you save more. You don't save less. When things are good, you put away a little money for when things are bad. You have a rainy day fund. You save for your retirement. That's what people do when times are good, right? You have extra money. You just go out and blow it. It's like, hey, let me put a little money aside. This is, for my retirement or for, college fund or in case there's an emergency. You don't go into debt during good times. You pay off your debt during good times, especially if you look. What are people borrowing money to buy? Food, their groceries, right? Their utility bills, their insurance. People are going into debt just to keep their economic head above water. This is not good times, right? This is nonsense that the media wants us to believe that we deplete our savings and go into debt when times are good. No, we don't. Again, I've used this analogy many times. In fact, it's been used by other people. Jeff Gunlock, used the analogy as well. But if you run into an old buddy of yours that you haven't seen in a long time, and you say, "Hey, how you doing?" and the guy says, "Well, I'm loaded up with debt. I maxed out 3 credit cards. I depleted my retirement accounts. I pulled all the money out of my IRAs and I spent it all." Is your assumption, well, gee, the guy's doing terrific, right? He's loaded up with debt. And if you run into another guy and you say, "Hey, how you been?" He goes, "Oh, well, I paid off all my student loans. I fully funded my retirement plan. I paid off my mortgage," right? Which guy is doing good? The guy that's out of debt or the guy that's drowning in debt? I mean, it's obvious that when times are good, you build up your personal balance sheet, you pay off your debts. But the government wants us to believe that because we're loaded up with debt, that times are good. When it's not. This is a disaster of an economy. And if you look at the personal income and spending numbers, they're not even adjusted for the actual inflation rate. So the main reason that people are spending more money is because things cost more. That's why they're spending more. They're not buying more. They're just paying more. Now, I know there's a deflator that's here that's supposed to equalize it, but it's all BS because the government numbers by design do not capture the real degree to which prices are rising. So this is all an illusion. We spend more because things cost more, and because we don't earn more, we borrow more. And that is what is powering this phony economic recovery. Now, if you look at the inflation numbers, because the Fed, apparently the Fed likes these numbers, right? These are the numbers they like more than the CPI, right? This is the core PCE, the year-over-year PCE. That stands for personal consumption expenditure. And the reason the Fed likes this number the best is because it's the least accurate. But it's not just the least accurate in that sometimes it's too high, it's always too low. Like whatever the CPI is, this number is going to be lower. And that's why the Fed likes it, right? Because it makes their job easier, because it makes it easier to pretend that inflation is lower than it actually is. And the reason is because of all the substitution and the hedonics. There's a lot more manipulation that goes into the PCE to artificially lower the number. I mean, you got that in the CPI too. So all the government numbers that purport to measure inflation understate inflation. But the PCE understates it the most. That's why it's the Fed's favorite measure. And so that the number was supposed to come out, the month-over-month number was supposed to be up 0.2. And that's, in fact, exactly what it was. It was up 0.2. The year-over-year number was supposed to be up 2.5, and it was up 2.5. So exactly as expected. The only good news, right, was the core PCE, not even month over month, because that rose 0.2, which was in line with the expectation. But the year-over-year core, which was supposed to go up to 2.7, stayed at 2.6, which is where it was the month before. But if you look at this number at 2.6, this is the Fed's favorite way to measure inflation because it's, the most understated. But even this number is 2.6. 2.6 is not 2. In fact, 2.6 is as far away from 2 on the upside as 1.4 was on the downside. Now, what was the Fed doing when inflation was 1.4? Not that it was even there very long. Well, they had the monetary pedal to the metal, right? They had quantitative easing and 0% interest rates. We were so far away from 2% inflation that we needed QE and 0% interest rates to get the rate to go up to 2%. Well, now we're symmetrically as much above 2% as we were below, and apparently the Fed can cut rates. Why? There is no indication in any of this data that we got this week that inflation is anywhere closer to 2% than it was 3 months ago, 6 months ago, 9 months ago, a year ago, when the Fed said, hey, we can't cut rates. We need more data. We're data dependent. We want proof that inflation is coming down. Well, they have no proof. Yet they're prepared to cut interest rates anyway. Why is the Fed going to cut rates? It's not because inflation is coming down to 2%, because it's not. It's because the economy is too indebted to handle the rates where they are right now. And that's why the Fed's got to cut. And the government can't afford the rates where they are right now. The Fed's got to cut. In fact, the only reason that long-term rates aren't much higher is because everybody has anticipated that the Fed's going to cut, which is exactly what they're prepared to do. They are going to live up to that market expectation. And of course, the Fed is trying to do what they can to reelect Kamala Harris, to maintain the current administration. And so they got to cut rates. In fact, they probably got to cut rates again, right before the election, to try to give the economy some kind of boost, because all of the negative consequences of these rate cuts won't manifest themselves until after the election. So they can cut rates before the election and try to help the Harris administration. A few more data points that came out. We had durable goods for July. And now the headline number was strong, but that was with all these aircraft parts and stuff like that, because we had minus 6.9 last month. So it was a huge negative number. And so we got plus 9.9. It's very volatile. They were looking for plus 4.5. What's more significant is the ex-transportation number, because there they were looking for 0, and we got minus 0.2. And they revised the prior month from up 0.5 to up 0.1. And if you look at core capital goods investment, that was supposed to be up 0.1. It was down 0.1. And they cut the prior month in half from up 1 to up 0.5. So the durable goods orders are weak. Look at the Dallas Fed manufacturing. Another negative month. I can't even remember the last time this was a positive month. It was minus 9.7. Yeah, it wasn't quite as bad as the minus 17.5 that we got in July, but it's still a negative number, right? These are weak numbers. Manufacturing, again, all of the data confirms that manufacturing has been in a recession, right? So how can manufacturing be so weak? And the Biden, administration claim, and through Harris too now, that the economy is so strong, right? And again, if the economy was so strong, we wouldn't have record high trade deficits. we wouldn't have a record low savings rate and a record high credit card debt. Richmond Fed, manufacturing, minus 17. Another big negative print, which was worse than the minus 17 from the prior month. Look at the Chicago PMI, 46.1. Again, anything south of 50 is in a contraction. And we're at 46.1. That was below the estimate of 46.4. Yes, it was above the 45.3 from July, but that was a disaster. That was one of the lowest numbers we've ever had in July. So Chicago PMI, horrible numbers. So all of the economic data that came out on the week was bad. And we didn't get the reaction in the markets that we should have got to economic data this bad, mainly because the bigger players don't understand the fundamentals, right? They're still trading on, well, if we're spending money, that's good. Inflation is good because it means the Fed might not cut. They don't understand it's stagflation. We have a very weak economy. It's much weaker than people perceive. But that weakness is not going to push inflation down. It's going to actually pressure inflation up, which is going to go up anyway. But as the dollar rolls over, and the dollar, I think, is in the process of collapsing. As the dollar collapses, that's going to ignite a new surge in commodity prices, in particular oil, but across the board. And all of that is going to put a lot of upward pressure on the CPI at the same time that the recession is worsening. And the government is going to be forced to revise even more prior jobs numbers to show a much weaker jobs creation than what they've showed so far. So in this window of opportunity, as I've been pounding the table, there's a table, I'm pounding it, is to buy these gold stocks. The decline we had last week on a minimal decline in the price of gold, where gold is still above 2,500, right? We're holding this breakout. It's amazing that the support for gold keeps ratcheting higher, yet people are still willing to sell massively undervalued gold stocks on any decline, right? People have got one foot out the door. So I would be buying these gold stocks. You can't buy them on Monday because the markets are closed for Labor Day. But on Tuesday, get into my gold fund, the Euro Pacific Gold Fund. EPIGX is the no load symbol. You can buy it at Schwab or Fidelity. The good news is you can buy physical gold. Again, I think 2,500 is the support. I mean, I think it could trade below 2,500. We did get below 2,500 again intra-week, just like last week, but we didn't close below 2,500. So if you can buy below 2,500, that's great. But even if you buy it just above 2,500, who cares? Because this is basically the new support. Can it go lower? Sure, but not substantially lower, right? We keep having higher lows and higher highs. This is a massive bull market that is in its infancy. So again, Schiff Gold is open all weekend. We're open tonight. We're open all day tomorrow night. So you don't have to wait for Tuesday to buy gold and silver. You can go to schiffgold.com and you can buy it right now. While gold continues to set new record highs, fool's gold, aka Bitcoin, is continuing to be under pressure. In fact, as I am recording this podcast live on Sunday night, Bitcoin is 57,300. Now, I know the Bitcoiners like to talk about the big gains that Bitcoin has had so far in 2024. And yes, it is up. It's probably up more than the stock market. But all of those gains happened in the first 2 months, January and February. And it was all because of the launch of the 11 Bitcoin ETFs, actually 10 new ones. And then you had Grayscale convert to an ETF. But we have now 11 US listed spot Bitcoin ETFs that we didn't have last year. And so there was a lot of hype, right, surrounding that. But over the last 6 months, Bitcoin is down maybe about 8%. So all of the gains were in the first 2 months. So if you didn't buy it early in January, you don't have any gains. In fact, the vast majority of people who bought Bitcoin this year, either directly or through an ETF, are losing money. On the other hand, hardly anybody who bought gold is losing money. Over the past 6 months, while Bitcoin is down 8%, gold is up 23%. That is a massive divergence. Nobody's talking about it. Nobody cares about it. But I'm talking about it because I think this is an indication that the momentum has flipped. It's no longer that Bitcoin is gaining on gold. Bitcoin is now losing. And in fact, on market cap, the gain in the gold market cap is massive because gold market cap is already maybe 10 times the size of Bitcoin's. And that market cap has increased by 23% as Bitcoin's market cap has dropped by 8%. So the idea that Bitcoin is going to one day overtake gold or somehow get gold's market cap is even more far-fetched now than it was, 6 months ago, given how much bigger gold's market cap is right now in relation to Bitcoin. And again, if all of this buying and all of this hype couldn't lift Bitcoin to new highs, because it never made a new high in terms of gold. I mean, not even close. What will? Nothing. And remember, I still think that the Harris-Biden administration is going to unload all the Bitcoin that the U.S. government owns before the next, before Trump becomes president, if in fact Trump wins the election. They're going to dump that Bitcoin. And in fact, one of the reasons that they may sell that Bitcoin is just to burn all the Bitcoin guys who are supporting Trump, right? They're giving the Trump administration a lot of money. Well, how do you stop that? Well, crash Bitcoin, sell your Bitcoin, and that'll hit the pockets of the Bitcoin whales that are now donating money to the Trump campaign. So if you want to try to hit those donors where it hurts, you sell your Bitcoin. So all that talk about the U.S. government buying Bitcoin, they're actually going to be selling Bitcoin. And I don't believe, even if Donald Trump wins, and I hope he does win, but even if he does win, I don't think he's going to be buying Bitcoin, even though he's got Robert Kennedy endorsing him. I don't think there's going to be a Bitcoin reserve. All Donald Trump promised was not to sell the Bitcoin that the U.S. government has. And if the Biden administration already sells them before he comes to office, then there's nothing for him to do. He's not going to go out and buy Bitcoin. Remember, Donald Trump, when he was president, correctly said Bitcoin is a fraud, it's a scam, it has no real value. And I don't believe that he's changed his mind. I do believe that he's seen that there is a lot of money, a lot of investors that are there. And so it's votes, it's campaign donations. So I think he's, obviously trying to play to that audience. But I think once he's president, and again, he's not going to serve 2 terms. He can't be reelected. Even though he's serving non-consecutive terms, you can only be elected twice to the presidency. So Trump's got 1 more term, and so I don't think he's going to waste part of that term going deeper into debt. Right? We got enough debt already that we're not going to go deeper into debt to buy a bunch of Bitcoin. So I think that, that's out there, to get votes, but that's not going to be what happens. Anyway, this is a good, transition to talk a little politics, because I wanted to talk about the interview, and I use that term very lightly. Kamala Harris did her first interview, right, with CNN during the week. And she didn't even do her own interview. right? She had her VP pick, for emotional support up there with her, kind of, I guess, to help her with these questions. But it was a very scripted event. It wasn't live, right? They recorded it. They pre-recorded it so that if Kamala Harris screwed up, and God knows how many times she did screw up, right? They could edit it. And apparently the interview was a lot longer than the little bit that they showed us. So God knows what they took out. They gave her the questions in advance. And so it really wasn't like this interview. It was an infomercial sponsored by CNN, right? Which, used to be the Clinton News Network, and it's obviously, controlled by the Democratic establishment. But Kamala Harris was getting a lot of flack because she hadn't done any interviews, right? Hey, you've been the nominee, the presumptive nominee. Now you're the nominee for so long, and like no one's talked to you. So she was under a lot of pressure to do an interview. So they came up with this fake CNN interview so that they could, respond to their critics by saying, "Oh, you see, look, she did CNN." But even though this was a highly scripted, edited, infomercial, with a highly pro Democratic network that was trying to help Kamala Harris, she still did a lousy job. I mean, if this is the best she could do under all those circumstances, imagine how she's going to be when she does have to debate Donald Trump. Now, I know the bar is not that high because Biden did so bad, right? Maybe that if we compare Harris to Biden, she can't possibly be nobody could be as bad. I mean, Biden has set the bar so low for the performance of a debate that it's going to be nearly impossible for Harris to come in lower than Biden. But she's not going to clear it by much. And so, all this, hype and euphoria, enthusiasm that surrounds the Harris campaign. I can't even believe that this is genuine. I mean, I know that Kamala Harris was the most unpopular vice president in history, right? So before she got the nomination for president, she was the most unpopular vice president ever. And she was serving with like the most unpopular president ever. Now, all of a sudden, they put her on the top of the ticket and everybody loves her. She's got high favor ratings. Now, Trump was way ahead of Biden, and now somehow he's way behind Harris, when it makes no sense to me. And especially if you look at some of the things that Harris said during this infomercial on CNN, right? Well, one of the things she said is, she loves fracking now. She's a big fan of fracking. I guess fracking is her middle name, right? Kamala Fracking Harris, right? But I mean, all of a sudden she loves fracking. She's, kind of doing all these flip-flops. But if you just listen to what she has to say, you would think that Donald Trump was president right now, because she's running on like a change. And everyone's saying, hey, let's vote for Harris because it's time for a change. What are they changing? I mean, unless you're talking about the gender, right? If that's really the hidden message of the entire Harris campaign, is it's time for a female president. Because we've never had a female president before, right? All the presidents have been men. And maybe they're saying, it's time we got some estrogen in the White House. That's why we have all these problems, is too much testosterone. So it's time for a change. We got to elect a female president. Now, look, I've got nothing against the female president. I got something against Kamala Harris. I mean, if we're going to elect a female president, she needs to be a free market, libertarian, capitalist type woman. Then I'm all on board, right? I don't really care about the sex of the president or the ethnicity or any of that stuff. I care about what the person believes, their character, their experience. And Kamala Harris doesn't have any of those qualities that would want me to vote for her, assuming I could vote for president, which I can't. And by the way, I can't vote, so you guys are going to have to do that for me, right? I can't. Now, again, I voted for Trump. The last time I was able to vote for president was in 2016. I wasn't able to vote in 2020, so I sat that election out. But I was actually going to vote for the Libertarian candidate until the day of the election. I said, screw it, I'm voting Trump, right? I just wanted, I thought he was going to win, and I wanted to actually vote for the winner and get on board and just hope for the best. Although it didn't matter because I was in Connecticut. Trump lost Connecticut. And so, that's why I didn't mind moving to Puerto Rico. I talked to these people in Puerto Rico, and, they want statehood because they want to vote. And I was like, look, I voted for a long time when I lived in Connecticut, and it didn't matter. All I did was vote for the loser, right? So who cares, right? So I vote for the loser. I might as well not even vote. But for those of you who are in these swing states, maybe your vote might count. I don't know. But I can't vote. So you guys got to vote for me. And so you got to vote for Trump, even if you're a libertarian. Philosophically, and I'm not even following the Libertarian campaign because it's just a waste of time because there's no chance. And so the best ways to get libertarian ideas into government is through the Republican Party, unfortunately, right? There's no chance. The Democrats are so bad at this point, right? Even if you used to be a Democrat, you got to vote Trump, even though he's not ideal. Trump is like a moderate. They think he's like this radical conservative. He's like a Rockefeller Republican. He's not Ronald Reagan. He's not, Barry Goldwater. But, at least he wants to end the wars. At least he believes in freedom of speech, right? So there's a lot of things. The fact that you got Robert F. Kennedy endorsing Trump, that shows you how far the left the Democratic Party has shifted. And now you've got this radical left wing, probably the most left wing ticket we've ever had. And we've had some major, left wing tickets when we had Hubert Humphrey running, we had George McGovern running. This ticket is to the left of, and McGovern lost and Humphrey lost, right? Because the country, even back then, wasn't willing to go that far left. Well, they shouldn't now. It would amaze me. I think the only way that Harris would win if enough illegals voted for her, because, Trump is saying, vote for me and I'm going to kick all these illegals out of the country. So if you're an illegal, who are you going to vote for? The one promising to roll out the red carpet for you? Not only let you stay here, but like give you free money to buy a house and all kinds of crap, right? So they're bribing the illegals who aren't even allowed to vote in a federal election. But, but I think the only way that Harris would win the election is if she gets those votes, because clearly, that's her base, right? The illegal immigrants are going to vote for her. But, she's got, other, people in the base. But I think enough of the Democrats, have moved, even though they were never Trumpers. Trump is not nearly as dangerous a candidate in the minds of the voters as he was in 2016. Because in 2016, people were saying, oh, you can't elect Trump. Oh, he'll start World War III. Did he? No. Who's more likely to start World War III? Harris. We're closer to World War III now than when Trump was president. In fact, when Trump was president, there weren't any wars. And so people know what it was like when Trump was president. He's already been there. So it shouldn't work. So if Trump was able to win in 2016 when he was an unknown wild card, he should get the votes of a lot of people who now know, okay, he was there for 4 years and it wasn't that bad compared to the last 4 years. That's why even Kamala Harris is promising change. She's saying, vote for me and I'll fix the economy. Well, shit, you broke the economy, at least in the perception of the electorate. In fact, if you got these great economic plans, why are you waiting till next year? Start right now. You're there. You're the vice president, right? Does that count for nothing? Right? You got Biden's ear. In fact, you got his whole body. Do something. We don't have to reelect you, right? We don't have to wait for next year when you're already there. So to me, I think that other than, manipulation. And in fact, the other things that have happened in 2020, you had all the social media that was intimidated, right? During the week, Zuckerberg admitted that the Biden administration pressured Facebook to suppress information on COVID. But I think more significantly, the Biden-Harris campaign got Facebook to suppress the Hunter Biden laptop story under the pretense that it was false, that it was fake news, when we now know it was 100% legitimate news. But Zuckerberg cooperated and artificially suppressed a true story that, had it gone out, likely would have tipped the election. I'm confident that had the truth come out, it was a close election in 2020. People don't realize it was not a lot of votes in just a few swing states that tipped the balance. Had the Hunter Biden laptop story not been suppressed, it's very likely that Trump would have won. And so where was the election interference? It was on the Democratic side, right? They interfered with the election. They pressured social media companies, Facebook, probably Twitter too, and, to basically censor the truth and prevent Americans from disseminating truthful information to the electorate, specifically to influence the outcome of that election. But the point that I'm making now is that's not going to happen, because Elon Musk now owns Twitter, and it's called X, and he's endorsed Donald Trump. So not only is Twitter not being mobilized to undermine Trump and to prop up Biden, it's actually supporting him. And now Zuckerberg has actually confessed and says he regrets what he did. He said that he thinks the government pressure was wrong and he regrets succumbing to it, which I think, is admirable that he came out now, better late than never, and admit it. And so Facebook's not going to help Biden like it did in 2020, or Harris. And Twitter's not going to help. So, Trump has got so much going for him now that he didn't have going for him in 2016, and he won. He won in 2016. So a lot of these never Trumpers, are going to come around. And I still believe that a lot of the people who are being polled, I don't know how they ask these questions, but they're probably, maybe embarrassed to say that they're going to vote for Trump. They want to give the answers that the pollsters want. They want to, virtue signal. Oh yeah, I'm going to vote for, Harris, because maybe you're a better person if you support Harris. But when people get into the voting booth, right, there's nobody there. There's no cameras. You can vote your conscience. And I don't think people want 4 more years of what they've just experienced. They want to go back to the way things were when Trump was president. Unfortunately, that's not going to happen. That is the sad part. Things are going to get a lot worse regardless of who wins this election. But that doesn't mean the outcome is not important, because there's so many things beyond economics that are important in this election, that are a reason that we need to vote for Trump and need to make sure that the machine, the establishment, and that's why guys like Robert Kennedy Jr., right, are rallying around Trump, right? And again, there are a lot of things that I disagree with, but I think he's sincere. I think he believes what he says. I think he's an honest guy, and he cares about the country. And he doesn't like what's happening in the mainstream establishment that has taken over the Democratic Party, and really which took over the Republican Party before Trump. That's why so many Republicans didn't like Trump, because he was a threat to the Republican establishment, which was also an enemy of the country, and which was one of the reasons that I vote Libertarian. Because they weren't the Republicans. Well, Trump isn't in there either. Trump gets this. I just wish he understood the whole story. I wish he got the whole thing. But you know what? He's going to be surrounded by people maybe who do. And this is my thought process, is that we're going to have a crisis. Who do you want to be president when we have the crisis? I'd much rather have Trump. because there is no chance that that Harris is going to do the right thing. And she's going to surround herself with a bunch of socialists who are going to seize on the opportunity to blame capitalism for all these problems. A Trump administration is not going to throw capitalism out the window. And so there we've got a chance at salvation. We got a chance at doing the right thing. Not to avert the crisis, that's pretty much a done deal. But to try to, right the ship after it sinks. Anyway, that's it for tonight's podcast. I hope everybody enjoys the rest of their Labor Day weekend. I've got a party to go back to. In the meantime, you like this podcast, don't forget to like it, comment. If you're on YouTube, subscribe to the YouTube channel if you haven't already done that. Oh, and don't forget about subscribing to Schiff Sovereign. If you're still not getting my free newsletter that comes out almost every day at Schiff Sovereign, make sure you go there, schiffsovereign.com, sign up. And if you got a few bucks, it's really worth it. I think we got a lot of value in Schiff Sovereign Premium. In fact, if you join Schiff Sovereign Premium, you get all the stuff that we get at Schiff Radio Premium. You get, all that stuff, plus a lot more. And, it comes with a money back guarantee. So if you don't like it, if you're not satisfied, just say, you want to cancel your subscription and you'll get the money back for, the month that you tried. Anyway, bye for now, everybody.